Okay, let's go ahead and get officially started. Welcome to today's webinar titled The Three Most Effective Strategies for Managing Your Retirement Portfolio. My name is Jim Penna. I'm the manager of retirement services here at VectorVest. I've been here about 15 years now, and I'm really excited about this presentation. I hope that you guys are excited as well. In fact, my promise to you today for this presentation is to show you that you can build wealth, transform your legacy, and live financially free. Right? That's a pretty high standard I'm setting early here, and I know you're thinking, well, you know what? Go ahead and prove it. You probably get flooded with emails promising you these kind of things all the time, and you're probably skeptical, and I don't blame you. But what I want you to know is VectorVest, we've been here a long time. We've been doing this since 1988. Technically is when VectorVest began. All right. There's just one example when I talk about prove it. This is from 2017. I began a retirement growth portfolio for retirement services in our retirement coaching group. It's averaged about 45% annualized rate of return per year. So the ideas and the strategies I'm going to talk about have gotten us some pretty nice results like this. And I'm going to talk a lot about the drawdowns that you see here, as we saw in the pandemic and some of the other sell-offs, and how to mitigate those as well. I'm going to also talk about another portfolio which uses a strategy we'll talk about today. This is a longer term one. This is a dividend portfolio, right? This goes back a little bit further, and this is just the capital appreciation portion of this portfolio. This doesn't include the dividends that were collected. I've calculated them out to just under $55,000 at this point over that time frame. So add that to the 187% gain, and that doesn't even include compounding the dividends that came in if you were to reinvest. Okay, so when we talk about prove it, again, we've been here a long time, and this is what we've been able to do. One of our clients, Jerry, he was kind enough to talk to us about his success here. He told us about his ability to generate consistent monthly income. Now, after going through our training, he went from being, these are his words, hit or miss with his trading and having no methodology, to where he's now generating better than 2% extra each month. So I want you to know that this presentation is built on results, and I'm going to show you the system we use to achieve these results. Okay. So if you are interested in learning about all of that and it sounds good to you, now's a great time to turn off all your distractions. Close your door. I know you're not going to turn your cell phone off, but put it on vibrate. Maybe close some of the other windows on your computer. Try not to multitask. I want you to stay focused and give this your full attention, because I really do think that it can lay a foundation that can make a huge positive impact, right, on your life. I know that you know it's a webcast, but there's information here that really moving forward can make a big impact on you. So again, thanks for being here, and I'm going to do my best to achieve that. So let's get started. Here's how you know if you're in the right place today. Right? Here's how you know if you're in the right place being here. So you're in the right place if you're worried about the next market collapse wiping away a good chunk of your nest egg, right, your net worth, and it's causing you to be ultra conservative so that you're not in the market getting the gains that you see others getting. Even though we've had volatility, the market is still trending upward, right? But if you're too worried about being in the game, that could be one reason why you're here. Maybe another reason is you want to grow your account steadily each year, but it seems like every time you try to come up with a plan on your own, you start to spin your wheels, right? Stocks go up, stocks go down. There's no real plan behind it, so you're spinning your wheels. You may be here today because you don't have an income source that is as steady or as big as you need it to be, and it's causing you to scale back your lifestyle, right? And you're not able to do the things you want to do. Right? That may be why you're here today. This would be, for me, this is a tough one. You fear you won't be able to retire when you want to, and even worse, you may need to rely on others to take care of you, and hopefully that's not why you're here, but it may be. Or finally, you might be one of the many people over 65 who still have to work. Not because you want to, but because you have to. Okay? Or you're worried you'll be in that position if you're approaching retirement. Okay? There's nothing wrong with working beyond 65. It's wonderful if you choose to. It's when you have to. That's what makes it a little bit tougher. So as I said, I'm going to interact with you guys throughout the presentation. I want you to just type in yes if any of those ring true to you. Do any of those cross your mind as you build and manage your retirement portfolio? And yeah, like I said, it takes a second, but Kevin, Dean, Michael, Alma, Alfred, yeah, a lot of folks are typing in yes, and it's true. All of them, Daniel says, yeah. I mean, it does for me still, and I've been, like I said, I've been here at VectorVest for 15 years. And just to give you a little background, I worked on, as I go through this, I worked on a trading desk. I was a market maker for a long time. I worked on some smaller trading desks, and and also to let you know, 2 lifetimes ago, I was a police officer in Connecticut for almost 10 years. So if it happened in a recent webcast, so if I start to sound like I'm telling you what to do or get a little passionate, sometimes it comes from that. So, but anyway, yeah, a lot of folks. Luke says, yeah, reason number one was his reason, or might be the reason why he's here. But a lot of folks typed in yes, and you're not alone. That a lot of these things do ring true for a lot of folks. So we've found that the real problem in your retirement investing is that the model is broken, right? All of those reasons I gave are just the symptoms to really the core issue, the core problem. And the real problem causing those issues is that your retirement investing model is broken, right? And we believe you can fix it. And sometimes it just takes a few tweaks to do it, and that's what we're here to do. So the model that we use and have proven to work is what we call the 3Ps investing model, right? The 3Ps. What are those? Well, the first one is profit, right? When you think of profit, you can also think of the word growth or capital appreciation, right? One of our strategies we'll talk about is a plan to grow your portfolio safely and steadily each year. The next P is provide. When you think of provide, think of it as providing income. It's really a system, and there'll be 2 parts to the provide portion that I talk about, but it's there just to simply create a steady cash flow as you approach, and then especially once you are in retirement. And finally, when you think of preserve, think of protect. Preserve your capital. To me, it is the most important of the 3Ps. Right? It is a protection plan for capital appreciation so that you can secure your net worth. Right? It's most important to me because I always go back to a quote by the great hedge fund manager Ray Dalio. I'm sure you guys are familiar with. He always said, and I paraphrase a little bit, he said, you can't make money in the market without taking some risk, obviously, but you certainly can't keep your money if you don't know how to be defensive, if you don't know how to protect your net worth. And that's a quote that stuck with me for a long time, and that's why it's most important to me. All right, so remember, my promise is to show you how you can build wealth, transform your legacy, live financially free. Now, to do that, you need to grow your investments, generate income, and protect your capital. When you do all 3 of those, okay, that's when you can reach that point, that peace of mind of having financial freedom. Okay. All right. Those are not my handcuffs, by the way. I'm going to talk about in the presentation here, I'm going to talk about certain strategic shifts that you may need to make to begin to build and manage your portfolio to where you want them to be. That first shift you need to make is the shift from not being in control of your own retirement to where you take control of your retirement. Because after all, who cares more for your money, you or someone else? You might think you don't have the time or the knowledge or the skill. A lot of people don't have that confidence in themselves. But you're going to see here today, I hope, if I do my job, that you can do it. It doesn't take a lot of time. Listen, it's going to take some effort. It does take some time. It's not some, thing you learn in an hour and all of a sudden, everything's coming up roses. Right? But it doesn't take a lot of time. You'll see that you do or will have the knowledge, and that the knowledge is really right at your fingertips. Right? So you'll see that you do have the ability to do it. Right? So I want you to go from feeling not in control to making that strategic shift that you are able to take control of your retirement portfolio and your nest egg, your net worth. So now that you're here, because I think you've decided that you want to take control, I think that's why you guys are here. Um, let's look at let's talk about a few things first. Let's look. There are 7 signs that your portfolio will not be ready for retirement. Okay, that it will not be ready. So even though most people say they care more about their money than anyone else, what do most people end up doing? Well, the first thing that a lot of people will do is make the mistake of, just relying on Social Security to provide the income needed to retire happily. But boy, that's got a lot of potential problems, right? 60% of retired workers feel that Social Security won't even be around when they retire, right? Those are, some of the younger folks planning for retirement, right? And even if it is still around, you have to remember the Social Security website itself states that Social Security was never intended to be someone's sole source of retirement income. It was never really even intended for that. Remember when, I, when Social Security came to fruition, right? What was the average life expectancy? You know, you could collect it at 65, but life expectancy was what, 67, 68? So it's a little different now. So you can't really count on it. Right? The average Social Security benefit now is just over $1,500 a month. That's before Medicare premiums are deducted. So on average, you're left, on average, roughly about 16 grand a year, and obviously that's just not going to do it. Right? So what do most people do as they plan for their retirement? Well, a lot of folks will just save money. Put your hard-earned money away, stuff it under the mattress so that it's there when you retire. But what is the problem with that? Well, with interest rates low where they are, and yeah, in the next few years they may begin to, however long it takes, I don't know. They'll begin to rise, not anytime real soon. And the problem is inflation is actually higher than interest that you're receiving now, and probably will be for a while. So by saving your money, you're actually losing money because your dollars are being devalued. So, that's really not that you shouldn't put some money away, not that it's okay to stuff some money somewhere, but you can't do it with all your money because you'll fall behind. One of the reasons that your portfolio is not ready for retirement is that a lot of folks will just set it and forget it, right? They'll take that approach. They put their money into mutual funds or a 401k, IRA, whatever, and just kind of hope for the best. Unfortunately, when you do that, the market drops and wipes out 30 or 40 or 50% of your money, and many people end up delaying retirement or have to go back to work maybe, which can lead to really a really bad one here. When all else fails, you can always play the lottery, right? I remember the commercial, which I remember it advertised the lottery. It said, all it takes is $1 and a dream. And for many, that $1 turns into 2, then 10, then 50, and a couple of hundred a month, and all of a sudden you're hoping for the Hail Mary there, and that really is not the best retirement plan to look into. Okay. All right. A couple more reasons here. One of them that you can do, a lot of folks will do, is hire someone to make decisions for you if you don't feel ready for retirement. That's what Rob did here, one of our subscribers. He retired in 2005, and as we all know, the financial crisis hit in late 2007 and 2008. And he told us he had used professional advisors to help manage funds to build up retirement portfolio, and the advisors told him to just ride it out. And by 2008, he had lost over 40%, and his retirement plans were in ruins. Total despair, and it looked like he'd have to come out of retirement and go back to work. Now, it might not be as dramatic a drop like Rob's was, but Carol also shared with us another typical result. She hired an advisor in 2013 because her dad had passed away, and she had someone help with her inheritance. She said by early 2017, I finally had time to take an in-depth look at what the broker I hired was doing to grow my inheritance. I was shocked. It was a mishmash of cookie-cutter funds. After their fees, the result was 1% annualized during a time when the market did much better. Okay, these are things we don't want to happen, right? Another thing you do is spend less. But when you start spending less, right, and you tighten up your wallets, you're cutting back on your spending because you're worried, right? That's a clear sign that you feel that your portfolio is not ready for retirement. And then finally, if you, again, this is key, if you decide to work longer than you originally intended, okay, that may be because you enjoy what you do or you find something you want to do. There's absolutely nothing wrong with that, right? But if you go to work because you feel like you have to, like you must, it typically means your portfolio is not ready. So with that is the if you notice there the theme, you're exhibiting those signs. It's clear indication, again, that that strategic shift of you taking control is right in front of you. Right? There are hundreds of thousands of people out there, just like Rob and Carol, who trusted their money to people they thought were more knowledgeable and more skillful, who ended up losing half of their retirement investment savings and not ever able to achieve the gains they expected. Okay. These strategies will give you the techniques to both manage your own money as well as give you the information you need in case you do have somebody working. Maybe you do have somebody managing some of your nest egg. That's fine. But the techniques we're going to talk about are going to be helpful because you can help your manager manage your money as it will turn out. Okay. All right. So from there, let's go ahead and go into the to the strategies that we're going to talk about. So I'm going to start with preserve. Right. I'm going to start with preserve. So again, you've decided to take control of your portfolio. In my opinion, it's the first thing we need to go over. You need to protect your assets. So instead of worrying about the next market collapse wiping away your nest egg, right, you need a strategic defense system to protect your assets. And it has to be more than a barn out in the backyard. Okay, a lot of people get caught by surprise when the market drops. After it happens, you hear people on TV and advisors talk about what you should do, now to try and make your money back. Right? When that happens, it means you weren't in control of your portfolio. So we talk about instead, you need to know when the market is what we would, however you want to phrase it, an overbought condition, a toppy market, a market that's making you nervous for your long positions. And so you need to know what to do to insure yourself, right? You insure your home, your health, your car, your life. I joke, that's not even a joke. My wife and I, we actually have insurance on our dogs too, right? So you insure your assets, and there's ways to insure your portfolios as well. Okay. So to do that, the first thing we have to do is understand the proper guidance and the proper market conditions. Right. So here's a look at the market, and this goes all the way back to 1999. Okay, this is a big 30,000 foot view here. So let me know in the chat box real quick if you ever bought or owned a really good stock and you watched it drop when the entire market dropped. And I'm not talking about just any stock that you happen to hear about on CNBC or something. I'm talking about a good stock, a company that you said, "Wow, this is a great company. I'm going to own this," and then you're left scratching your head as you watch it drop. Right? Yeah, it's happened to GE, yeah, no, America Online, Marco said, Yahoo, yeah, boy, you're going back, right? We've all been there. We've all been there. I've been there. I've been there more than I care to admit to. But yes, Matthew, it happens all the time, and it will continue to happen. But we can certainly lessen the number of times it happens, right? I can never guarantee that it won't happen, but we can certainly lessen the times that it does. So let's talk about the market. I'm going to go ahead and zoom in here a little bit, and we're going to go back in time and look at, you guys are familiar with all of these, and I'll talk about some others as well. But I'm guessing there are people in this room today who held stocks or managed funds through the bursting of the dot-com bubble, right, back in 2000. Right, I remember I was working for Knight Capital. I was a market maker during that time as it led up to, and then after the bursting of that bubble. So I remember it very clearly. Whoops, I'm sorry. Our customer subscriber, Lynn, he got hold of us and let us know that during the dot-com boom, that he had 80 grand invested, and he increased it like 5 or 6 times leading up to 2000. However, in 2000, he proceeded to lose almost everything over the next 2 years. And, you can read his words there, but he wasn't happy, right? And he needed someone to blame. Right? Those are his words. Right? That happens way too much. You make money during the uptrend, and if you don't know how to protect it, you give it all back, and you spend literally years trying to recover it. Sometimes when it's this dramatic. Right? This is 2000. Before it got back, this is the VectorVest composite that we're looking at. It was several years before it got back to those levels or even close. So if I zoom in a little more and move down memory lane here in 2008, when the housing bubble burst, right? At that time, the average mutual fund dropped over 40%. 40%. And people like Robert, who we talked about earlier, had lost 40% of his retirement and thought he'd have to come out of retirement and go back to work. Right? I know we all remember these, and just last year, right, the S&P dropped 34%. Now this was a much quicker downfall and recovery for sure. But I'm curious, how many of you had your financial advisor call you leading up to any of these events to warn you? Right? I doubt there were many phone calls you were getting telling you to get out of the market. Right? But what happens after the event passes, you might get a call saying, "Hey, by the way, you just lost 30%. Sorry, how do we get it back?" Right? So that's not what you want to do. All right, which brings us to today. All right, brings us to today, and many folks are still worried about the next market collapse. Some people say that you can't time the market. Right? The people who say that can't because they don't know how, or they don't understand the concept. Because the truth is that what you can't do is predict the market. And that's not what we do here at VectorVest. We do not try and predict where the market's going to go, but we can time the market by analyzing short, intermediate, and longer term trends in the market. And by doing that, greatly enhance the probabilities of being on the right side of that market. Okay, so even though the markets on a daily basis have their ups and downs, if you look at the big picture, you can see clearly major trends in the market. You can even see smaller trends like here and here in the longer term trends. Right? But you just have to know where to look, and you have to have the proper guidance. Right? Again, surprisingly, you don't hear this information from the talking heads on TV. They rarely say, "Hey, it's time to get out of the market. It's time to be defensive. Do something. Get out of the market." Right? It's rare. So you have to be careful where you get your information from, because it's good for their business when people are investing in the market. Advisors still get their fees whether the market goes up or down. It doesn't matter to them. So you need to be careful where you get your information. This is not to condemn all money managers and financial advisors. I just realize what I sound like when I say that. But there are good, honest people who do it. But generally speaking, right, it does behoove them to keep you in the market and not have you coming out of the market. So just be careful where you get your information, right? I guess is the bottom line here. So let's look how to use the right information so you'll never be on the wrong side of the market for any extended amount of time. Maybe a week or two tops, we believe is a great way when you're, again, timing the market. Doesn't mean you're going to get out at the very peak or in at the very bottom, but pretty darn close when you use the guidance I'm going to show you right here. So to ensure that your portfolio never collapses again, right, you want to make sure you have a system that allows you to determine the overall direction. Now, some people will use things like moving averages. There's a bunch of ways to do that. It's usually on the S&P, but I use the guidance from VectorVest. Okay. Whatever you do, I suggest you not base it all on what you hear on TV. Instead, you need to have a system which is not emotional, which is based on empirical data and has an historical track record. So let's do this by looking at a few major market moves that we talked about earlier. A lot of these were big game changers for a lot of investors, and these are the obvious ones. I'll focus on one or two others as well. But let's take a walk through again down memory lane here. Let's start by looking at the dot-com bubble. And the point of all this is to show you what proper guidance can and will do for you when applied correctly. So back on March 17th of 2000, I know I'm going back a ways, but this is important because it's time tested. This is the whole idea of going back and building confidence in all of this. So back in March of 2000, about a week off the peak of the dot-com bubble, we said, I believe that the rally is exhausted, and the quote here is downside risk outweighs upside potential, and that prudent investors should protect profits and take defensive actions such as buying puts. I'm going to talk about that a little bit in a little while too. Consider any rally as an opportunities to sell stocks at higher prices. Now, I'm not going to ask you if you think that's tremendous guidance, because I know it is. So if you were investing back then, and again, I'm sure a lot of folks here would that have been beneficial to you? Right? Would that have helped you? That kind of guidance, at least to get you thinking, what's going on in this market? Is it time to be defensive? What do I need to do? Yeah, and again, it takes time. I know the answer is yes. I like to keep you guys with me, so type it in if you feel compelled, or any other comments or questions. I forgot to mention my friend and colleague, Mr. John Marabu, is in the background here, and he is helping out answering questions, and we're going to be here to answer questions as long as you guys are staying in the room with us. Okay, so let's fast forward to the next big market collapse. Again, we talked about it earlier, the housing bubble burst. Now here on November 2nd, 2007, that was just days off of that market top. Dr. Delito wrote in this now historical essay here, a word to new subscribers. The confirmed down signal that we received yesterday could be the entree to a long bear market. Right? He goes on to talk about earnings were still strong at that point, but he went on to say we no longer appear to have the support of an accommodative Fed. Now, does that sound like something that could happen sometime in the not so distant future, where the Fed does begin, they started to taper, they begin to raise interest rates, right? When we appear to have the support, no longer have the support of an accommodative Fed, and that can make things very bad for the stock market. So don't be deceived by the endless parade of experts who will appear on TV telling you to buy stocks. This is not the time to buy stocks. Okay, how's that for some clear guidance? Okay, that's some pretty good guidance there. Now, let's quickly move to the most recent drop, which happened, as we all know, just last year. Back on February 14th, right, days before the peak, we noticed warning signals in our market timing indicators. Now, I'm not saying we predicted, this very strong, it was pretty quick, but this, what was going to happen because of the pandemic sell-off. But this is all more important, all the more reason to follow this. Right. So right at that peak, we talked about a divergence with our indicators. Right. The composite. This is the VectorVest composite where it was hitting new highs. Our other primary indicator, proprietary indicators, were the buy-sell ratio, relative timing, the MTI. They were closing higher, but their levels were lower than the January high as the market hit highs. We call that a bearish divergence. And what did it say? That downside risk outweighs upside potential. Okay, that's the red flag. And what happened? Well, we know headlines drove it and the pandemic drove it, but VectorVest was guiding you already, okay, on how to become defensive. And then just a week later, we said prudent investors should not buy stocks, and aggressive investors and traders should play the market with a bias to the downside. This is the guidance we give every night, Monday through Thursday in the views, and then the extended version on Friday evenings. Okay, so I know I can ask you, and I said I want to interact. You can type in or not, but I know that that would be helpful for you to be able to mitigate those losses. Again, I'm not talking about a trading account. I'm talking about your retirement. I'm talking about your net worth, right, and protecting it. So now that you know what to look for, I believe we now need to know how to react to that. So let's do a quick case study on portfolio insurance and just one way that you can protect. Now I'm going to go back to 2018, and this is a little, not one of those major ones I just talked about. This was a different one. I know 2018 today, in this day and age, seems like an eternity ago, but I remember this sell-off very well. And I'm sure a lot of folks do. There was another big market drop, and most people will remember that it bottomed out right on Christmas Eve, right? But that market, it took a big hit. So I'm going to zoom in even a little closer. So it was early October, and the VectorVest program signaled a confirmed down call. Our most conservative, I'll call it, market timing indicator that we use. Right? It's signaled a downturn. Okay. Now, as a retiree or someone with a retirement-minded investment objectives and goals, that is a great indication to become defensive and initiate portfolio insurance. You have to be proactive. So I don't have the slide up. I use a quote by a fellow Connecticut Yankee, Mr. Mark Twain, and he wrote a great quote. Another one I use a lot is, don't just sit there and worry. Do something, anything about what's worrying you. Right? You have to be proactive so that you can gain control and information over the situation. So you have to be proactive. And so here, this is the signal. Become defensive. What do? We buy put options as insurance. Okay. I don't really have time to go into a big option thing here, and just please know, if you're in the room and you're not real familiar with options, that's fine. You don't need to be an options expert. You don't need, three different, advanced option courses to understand what a put option is and how it can help you here. A put option gives the buyer of a put option the right to sell a stock or in this case the ETF at a certain price by a certain date. The value, and here's what you need to know, the value of the put option will rise, like should go up, when the value of the underlying asset falls. What does that sound like? It sounds like an insurance policy. I own an asset. It's damaged. This insurance policy will help to offset the damage to my asset. Okay. So in this case, a theoretical case, let's just say you have a $100,000 portfolio. The formula we use is roughly for a $100,000 portfolio. If you buy 3, maybe 4, if you want to, put contracts, and we do it at the money, right? That's a pretty good way to hedge in a toppy or overbought market if you believe the market's going to turn over on you. It's a good insurance policy. In this case, it only cost $1,800, $6.04 per share for one contract. Right? It means $604 for each contract. For three contracts, it was $1,800. Okay. So, what happened? Well, in this case, again, theoretically, had you held the option all the way to expiration, your puts would have a profit of just under 12 grand. That's 12%, right, on a $100,000 portfolio. Right? That's the profit. That's after the $1,800 you spent to pay for it. Now, I'm not saying you would have held it right through to expiration, but anywhere in this range, if you had closed it and pocketed that insurance premium, you would have done a great job mitigating losses in the market. In fact, Elaine, a customer of ours, he was kind enough to write to me way back. This is actually in early 2018. Because of your teaching, I hedged my portfolio at the end of January. It was a quicker sell-off, but he bought puts on the SPY. And he put less than $1,000 in. The move to the downside was pretty dramatic, and he made a good couple of bucks on it. So let me ask you, I'm going to take a quick drink of water. How much would this have benefited you during any of these market collapses? Right? Do you think that would have been helpful in any way? Let me take a quick sip of water. Yeah, okay. So Alfred says absolutely. Wayne says definitely. Alfred says yes. Luke's asking, what expiration do you use for the puts? Yeah, I would usually go out to the next monthly expiration. Again, I don't want to get too deep into the setup because I got some more information I want to share. I just, the idea of a strategic defense system using protective puts is what I want to relay. But generally, what I would do is an at the money put. So I'll give you an example. Today is November 11th, right? Happy veteran. They say, no, it's a question. Do you say Happy Veterans Day? I do. My dad's a veteran. Was a veteran. My brother is a veteran. Anyway, Happy Veterans Day to anyone in the room who Happens to be a veteran. Anyway, today's November 11th. So what expiration would I use? I would go out to the December monthly expiration if I were going to do one today. All right. So I go out to to the next monthly expiration to give you just a general idea. Okay, so we know that when we are strategically defensive, it gives us the preparedness we need to be ready for a downtrending market. So the next strategic shift is that you need to go from worrying about what could happen and being unprepared when it does happen to where you have that strategic defense system in place, which again protects your hard-earned assets. Okay, have that strategic defense in place. Very important. To me, the most important. That's why I spend that much time on it. Let's go to the next P. It's profit. Right? We talked about growing our portfolio or capital appreciation. Right? So now that you have the strategic defense system in place to protect your assets, you no longer have to really be all that afraid or be so conservative when investing. Now, this doesn't mean I want you to go out and be speculative and start buying, penny stocks, but you don't have to be quite as conservative or worried because now you know how to defend your portfolio when it's time. Right? So you'll be able to take full advantage of those market upturns. Right. Now, in the past, you might have been plagued by buying stocks that didn't go anywhere, were too volatile, and again, as I showed earlier, causing you to spin your wheels. So to fix that, we need to use the one of the VectorVest mantras, which is buying safe stocks that are rising in price in a rising market. Right. Now, in our retirement accounts for our retirement-minded investors, we want to look primarily at a stock safety. Really, much more than the other factors there, more than anything else, because we know it's fun to hit a home run, to use the baseball analogy, right? But we also know what most home run hitters do when they don't hit a home run. Right? We all know what they do, and that is, especially in today's game, drives me crazy, but they strike out. Right? It seems to be okay now that most guys strike out, 120 times a game. But we don't want that in our retirement portfolio, right? We can't afford that, and we don't want it. So even though the home run is enticing, we're not going to do that, because when you start to try to do that, you begin to invest like someone you're not, or against the objectives and goals that you've set for yourself. You're not following a plan because you're trying to invest in a way that's not conducive to your success. So that you definitely don't want to do. And then the other thing is, if you're not seeing the returns you want right out of the gate, some folks will think they have to be a little more aggressive, to go faster, right? You don't have to become a day trader or a really short-term trader to make money back that you might have given up in a market downtrend. So we use the analogy, right? I have two boys, they're a bit older now, but when I was teaching them to drive, if they were struggling, I didn't tell them, hey, don't worry, just go ahead and smash the gas pedal down and that'll take care of everything. I didn't do that. I told them, slow down, reevaluate, right? I want you guys to do the same thing. And it all starts from one of many great quotes I could use from Dr. D, but Dr. DeLito has said many times to me and in presentations, good portfolio management starts with buying the right stocks. And so again, to go to a sports analogy, I usually have the 69 Mets up here, but we changed that over. It's like being a GM of a sports team, right? If you do your best to put the best players on the field or on the court or on the ice, whatever sport it is, right? When you put the best players on the field, that's when you win. And it's the same idea with stocks. Build your portfolio with the right stocks and you'll create a winning portfolio. Well, how do we do that, right? How do we put the safe stocks in? Well, we have a stock safety checklist that we like to use. And these are just some of the factors and considerations that go into how we analyze the safety of a stock. I'll just go through them really quickly here. Earnings consistency is the first one. Does a company make money quarter over quarter, year over year, right? The company's size, the price, the volatility of the price. Debt to equity ratio is a big one, right? A good favorable balance sheet means that a company has the ability to withstand any kind of headwinds, or to the economy or specifically to their company. So we like to see that. How long has the company been around? Dr. D says, better the devil you know than the devil you don't. And then finally, dividend history. A good quality, safe stock doesn't have to pay a dividend, but if it does, if a company does pay a dividend, it better continue to pay it and to grow it. Right. So those are some of the considerations that go into the what we talk when we talk about safety. So let's do this. I'm going to go into um, the VectorVest program here, and I want to share with you something I put together. Let me get to the program. This is my VectorVest program here, and I'm going to go into the Viewers tab. And what I have set up here in my watch list, I created a watch list. And and let me just fit all the columns here. The watch list is simply, there's 40 stocks in it. And I just started typing, right? Stocks that you're familiar with, right? Well-known companies, where you shop, where you eat, what you drink, where you spend your money, right? Apple, Google, Ford, if you own a Home Depot, certainly in Lowe's, right? Target, Best Buy. I just bought a new TV at Best Buy. Pfizer, if you're vaccinated. Toyota, Microsoft, Apple, right? These are all companies you know and probably spend money at, for sure. Okay, so what I want to do is illustrate something for you, and it's going to be to illustrate the power of relative safety. Now, these 40 stocks are not just randomly thrown up here. They are sorted by VST. That's value, safety, and timing. Right? We take our proprietary indicators of relative value, relative safety, and relative timing, roll them into one indicator called the VST, kind of our flagship indicator on the the quality of the underlying company. Right? We take the square root of the average weighted sum of the squares of RV, RS, and RT. The square root of the average weighted sum of the squares. I have no idea what that means, but I love saying it. That's what gives us VST. Great way to sort them, great way to analyze the stocks. However, here's what I'm going to do as a way to illustrate the power of relative safety. If I simply left click on the RS tab, what it does is sort this watch list by relative safety. Now, of these 40 companies, the highest ranked, this is as of right now, as a matter of fact, the highest ranked RS stocks in this 40 stock list. So what I want to do is illustrate the power of it. To do that, I'm going to run a quick test. So I'm going to quick test the top 10 stocks from this portfolio, from this watch list, I should say. So I'm going to take it back, and I've chosen a date. I've chosen a random. No, I'm not really random. I chose it because it's almost, what would it be? Almost 3 years now. Why did I choose that date? Because it allows me to. Why isn't it doing it? Stay with me. Because it allows me to look at a quick test that's been through up and down markets. Right? We've been through up and down markets here, and so it gives a pretty good look. So if I run the quick test. I don't know why. Hang on, stay with me. That happened to me yesterday too. I want to quick test it. No, I know why. I'm sorry. I got to change the date here. I apologize. So I'm changing my date to January 2nd. This is what I was doing. So this is the list as it appeared back on January 2nd, 2019. And you could pick whatever date you want to do these from. This is what the list looked like back in 2019 on January 2nd. Now if I run the quick test, what we see are the top RS stocks, all winners from point A to point B, all winning trades, and just about right at the S&P 500. Okay, remember, this is with no money management techniques or anything like that. Right? So these well-known names, I think they're all in the S&P, I think. Performed right along with it with a very nice return, almost 30%. Now, let me show you this. If I click on relative safety again, what happens is now I bring the lowest RS to the top of the list. This is what the list looked like on January 2nd, 2019. Remember, this is the same 40 stocks. What happens now? Well, with the low RS stocks, even though there are some good performers there was only a 46% gain from that date to right now. That's almost half, not quite, but almost half of what the S&P 500 has done. Okay, so you see the significance just on this list of very well-known stocks, the power of relative safety, how the top relative safety stocks worked so well. What I want to do now is quickly go into the stock viewer, because why would you hold yourself to just 40 stocks, right? Let's go look at a list or a roster of over 9,000 stocks. And these stocks, I can left click in our stock viewer page, and I can sort 9,000 stocks with one click of a button with the highest relative safety number coming to the top of the list. Let's go back real quick to that same date, January the 2nd. And this is what the list looked like on that day. If I go ahead and quick test those top 10 stocks, I hit the wrong date again. Wow, this is unusual. I'm having trouble with the date box. Of all the things I can have trouble with, it's the date box. Quick test the top 10. There we go. So from that same, even though it beat it for the shorter term as well. So for that test period, again, we see 113 over 85 for the S&P 500. Once again, keep in mind this does not include any money management. So I'm going to show you how those numbers get even better. Okay, if we look at this list today, what this list looks like, I'm going to take one more second here, and I'm going to just graph like the top 5 of them or so. Right. I'm going to tag these, right click, and I'm going to view the stock graph. I just want to show you again what these stocks look like to give you a visual. This is just a 1-year graph of Google, and what you see are the earnings per share, how strong the earnings per share is, and that northeasterly direction on both of the earnings and the price of the stock. Right? It's a very familiar, very similar pattern that we see on all of these. Okay, these are the kind of stocks we want to reside in our retirement portfolios. Okay, so if I go back into the slides here, here's an example, a retirement growth portfolio. This is a portfolio I began in 2017 in our coaching group, and it's up over 214%. That's about a 45 annualized rate of return on that portfolio using a search called Ruler Stocks, which focuses on high relative safety. So we more than doubled, tripled the value of that portfolio. If you could double your money every 3 years, now that portfolio is closer to 5 years now, buying safe stocks, how would that affect your retirement? Okay, that is the returns that we're getting here. How would that affect? Again, that's just the second P, I should say. That's the profit. Okay, so we talk about the strategic shift that you need to make, and that's to go from a slow and stagnant growth to where you have a solid growth portfolio strategy that has you buying good, safe stocks at the right time so you can steadily grow your portfolio. Okay, that's the next strategic shift for us. All right, let's go to the final P, which is provide. I'm going to talk about generating income, and it's going to be in 2 parts. Okay, remember, you don't want to rely on just your pension. You certainly don't want to rely just on Social Security to carry you through retirement. Right? In order to continue the lifestyle that you're used to or that you desire, right, you're going to need to be able to open up some new income streams. Okay, you have to open up income streams, and how do you do that? Well, first, we're going to talk about dividends, building a nice quality dividend portfolio. One of the benefits in focusing on good quality stocks is they typically pay a nice dividend to their shareholders, and you want to capitalize on that. Now, I know everyone knows all about dividends, right? But I've learned that people have a really hard time finding the best dividend paying companies, right? Because it's not always the easiest thing to do. If you Google good dividend stocks, what the problem is when you try to do this research on your own, a lot of people get caught up in the current yield, right? Whatever the dividend yield is. Well, whatever this was NEWT had a current yield of 9.58%. I know it's an older slide here, but that doesn't tell me anything about the underlying company or the stock or the ETF or whatever it might be. It gives me no information whatsoever. The current yield down here in NASDAQ.com, right? Everywhere sorts it by the current dividend yield. Right? Dividend.com does the same thing. All of these things are sorted. Right? I don't know what SDR is. It tells me nothing about it. Okay. But inside the VectorVest software, there are several lists that we pre-built for you. For example, here you'll see a list of all the companies that have increased their dividend each year for the last 25 years. Now, this slide goes back to August of this year. The DRIP stands for the Dividend Reinvestment Plan. And we have others, 10 to 24, 5 to 9, among others here. But this list shows companies that have either not only paid, but have grown their dividend. West Pharmaceutical leads the way. Great company I happen to own as well, for sake of transparency. Nucor, Lowe's, all of these. T. Rowe Price, another great one. Okay, Target, Sherwin-Williams. Sherwin-Williams, I think, has grown their dividend for close to 90 years now. Brown and Brown, stock, not a very exciting stock, but will continue to grow, as has grown their dividends, what they call a Dividend Aristocrat. Okay, so here they're sorted, again by VST, and so you get some really great dividend-paying stocks here. Just to get a sense of what they look like, here's West Pharmaceuticals. Now, this is not a 1-year or a 5-year graph. This is back to 1995, right? This is the kind of stock, when we look for a quality dividend stock, is a company that is a mature company with good, strong free cash flow, that has a long and storied history of not only paying but growing their dividends. Right? And the VectorVest program is ideally suited to help you find those dividend stocks. So another portfolio we use was started back. This one's a little older, back to 2013, because you should look at a longer term outlook for a dividend type of portfolio as you generate that income. Now, what you need to know is that this is just, again, as I noted earlier on this same graph, this is just capital appreciation, right? Because in the VectorVest portfolio, you have to go in and add these manually. That doesn't automatically take into account dividends. I did calculate dividends out to this right up to a couple of months ago, and it's just under $55,000. And we already talked about how we mitigate the losses here, right? And how we would have mitigated here. And even, people forget, even in September of this year, right? We had a pretty quick drawdown. So you have to be able to protect your portfolio. To generate income in your portfolio, but also protect it against those type of drawdowns. Now, what I want to talk about quickly is the second source of income, which is similar. We refer to it as collecting rent from the stocks that you own that reside in your portfolio. So this is the second part of the provide portion, right? Your second source of income comes from selling covered calls, right? It's one of the safest option trades. It is certainly the most popular option income trade that's out there. Right? It's so safe, it's the main option trade retirement accounts will allow you to do. I often tell the story, I took my Series 7 test back in 1992. And back then, in an IRA, the only option trade you could do was selling a covered call, because it added no risk to your position, right? The risk was already inherent in the fact that you own the stock. So if you sell a covered call against the stock you already own, you're actually lowering your cost basis. You're lowering your risk because you've now lowered the cost basis, right? So it's a great way to generate extra income in your portfolio. Somebody typed in much earlier about a quote from Dr. D. He said, tell him to just keep making more money. I'll share that quote with you real quick. A long time ago, I had a conversation with Dr. D. We talked about what our customers were saying when we used to go on the road for our seminars and all. And I mentioned to him, in some form or fashion, a lot of the questions I get relate back to, how do I keep from running out of money in retirement? And Dr. D looked at me and said, and only the way he can. He said, James, just tell him to keep making more money. And I never forget that conversation. And that's what we talk about here, how you can continue to generate income. Let me illustrate, again, this is not meant to be an options course here, so I want to go through this, but this is the anatomy of a covered call and what it means. So let's say you go out and buy, or you already own a stock, and it's just ABC stock at any given time at $176. Right now, you own that stock. You can go out. Right, it has to be at least 100 shares, by the way. It has to be at least 100 shares. You can go out and sell a covered call. Right? What does that mean? Well, quick lesson on what a covered call is. First of all, a call option gives the buyer of the call the right to call away a stock at a certain price by a certain date. That's a bullish trade. If you're a buyer of a call option, you're bullish on the underlying stock. I believe it's going to rise. Now, as the seller of the call option, here is the most logical, straightforward definition of a covered call that I've ever read. It comes from a gentleman named Lee Lowell, and he said, right, this is what a covered call is. You have to know, someone out there will pay you money today for the right to take away your 100 shares of stock at a higher price at a later date. Okay, what does that look like? Well, you own the stock at 176. If I go out and someone's willing to pay me for one contract, in this case it would be $10.33 per share, or $1,033. They're willing to pay me that to take this stock away from me at a higher price from where I own it. That's all a covered call is. Someone will pay you to take the stock away at a higher price. Now, what could happen when you do that? Well, again, as I said, the risk is inherent in the fact that you already own the stock. However, the profits from the call, the premium you took in, gives you a cushion. It lowers your cost basis, so that's a good thing. So the stock could actually go down a little bit, in this case $10.33, before you start to lose any money. Right? That's a great benefit of selling covered calls. Right? Anything below that, yes, you have to have risk management techniques, but again, it's just like owning a stock. Next thing that can happen, the stock goes sideways. That's fine. You get to keep the $1,000, plus you can sell another covered call. You still own the stock. You can continue to generate income. And then finally, what if the stock takes off, goes higher? At expiration is above 180. Well, because you're the seller of the call, you're obligated to provide that stock to the buyer. So what's going to happen after expiration is that your brokerage firm, you'll wake up on Monday and that 100 shares of stock will be gone. However, you made 10,000, I'm sorry, not 10,000. On 10 contracts you would. On one contract you made $1,000, right? $1,033. But also you got to keep the $4 of capital appreciation, right? You own it at 176, they took it at 180, that's another $4, that's $1,400 in about a month span, give or take a few days. Imagine if you had a monthly dividend paying stock that paid you 6 or 7 or 8% a month, even 5% a month. That would be pretty good. So that's another great way to generate income. You remember from earlier, Jerry told us that prior to learning this income strategy, he told us, again, in his words, his investing was hit or miss and he had no plan in place. After learning the covered call income strategy that we teach, now he's generating just over 2% a month. So I'll ask you guys, how many extra income taps do you have open? Right? How many flows of income do you have? And what would that extra income allow you to do if you were able to implement that? Okay. So that's our strategic shift there, is to go from not having that income, right? Having that stream of income all rusted out there, to that steady, nice flow of income. Right? We want you to make that strategic shift that will allow you to live the lifestyle in retirement that you desire. Okay. So you guys showed up here today, I think, for several reasons. Could be any of these. It may be none of these, but for whatever reason you showed up here today, I'm glad that you did. Right? You may be worried about the next market collapse wiping away your net worth, and it's causing you to be too conservative. Right? We talked about that. Maybe you've been spinning your wheels. Your portfolio is going nowhere, and you're getting frustrated. Okay, we've all been there as well. And maybe you're here because you don't have that income stream. Maybe you have no income stream coming in, and you need to get one in place. Okay. And maybe, and again, this is the worst one. Maybe you feel like you're going to have to scale back, right, your lifestyle, and you may need to rely on others. And listen, maybe you're here and you're doing fine. Maybe you're okay right now, but you're not quite where you want to be. Right? You haven't quite reached that plateau where you want to be. And this is where you're looking for the plan on how to get there. You don't have one right now. Well, today I hope you learned that strategic shift from going from not in control to taking control, when you have a clear plan in front of you, you don't need to be worried about a market collapse when you understand the strategic defense system. That next shift was we saw steady growth in our portfolio by using solid growth strategies. And then we talked about the income flow from both dividends and the ability to sell covered calls. Okay. The main thing I hope you learned today is that the secret to build your wealth, transform your legacy, and to live financially free is to make sure your retirement investing model includes the 3 P's of profit, provide, and preserve. Okay. So that brings us to the obvious question that you may be asking yourself right now. How do I create this type of system in my retirement portfolio? How do I do that now? Okay, well, I believe you have a choice. You have a choice. You can do nothing and keep doing exactly what you're doing right now, but the same thinking will keep you getting the same results. And my fear is that you'll be in the exact same place you are now next year, worrying again if you'll have enough money for when you retire, and maybe the year after that and the year after that, right? You can choose to do it alone, maybe put together some of the things here and there and that you learned and work by trial and error. But mistakes can be very costly, so you have to be careful. Or you can choose to do what Jerry did, what thousands of others have done, and that is to get right to the solution. Right? Why do all the work on your own when there's training available that allows you to bypass all that trial and error I talked about? And you can get to success much faster. Right? So instead of taking the long way from where you are to where you want to be, take that shortcut, right? The shortest distance between 2 points is a straight line. And I'm laughing because I'm thinking of a quote from one of the all-time great movies, Caddyshack. The shortest distance from two is a straight line in the other direction. So that way you get your retirement on solid footing as quickly as possible, right? When you learn to take that shortcut and you get to where you need to be. So I want to give you the plan that if you and I were to work together for 5 weeks, literally you and me in a room every week for the next 5 weeks, here's what I would get you to do. Right? Here's what I'd have you do. It's called the Retirement Portfolio Transformation. It's a step-by-step roadmap to a secure retirement. Before I get to it, I need to point something out, right? Albert Einstein once said that everything should be made as simple as possible, but not simpler. It's important you understand that this is not some get-rich-quick scheme that I'm going to talk about, right? It's not some magic pill where you should expect results in the next 24 hours or the next 24 days. Right? This is serious and it requires some effort on your part. So if you're not going to commit to it, I would recommend that you don't do it, right? It's not hard to do and it doesn't take that much time, and I'll talk more about it, but you got to put a little work into it. Right? It's for serious people who take their retirement seriously and who are willing to put time and effort into learning the system. But this is why VectorVest was created and why we've put together this portfolio transformation for your retirement. Okay. The system works, but you got to do some work. It's not a magic pill. Right? You need a plan, and if you're willing to do the plan, then you'll get results every time. So by transforming your portfolio, you'll be able to build wealth for you and your family, transform your legacy, create a better life for you, for your children, for your grandchildren. Okay. So it's a simple plan, again, called the Retirement Portfolio Transformation. Give me just 2 more minutes to explain it to you. The easiest way is to walk through this map here and map it out for you. And let me start. Again, we're going to talk about the 3Ps. We'll start in Module 1. First, we'll build a strong foundation for your retirement. This is where you'll get clear on your goals and objectives, right? And it's very important. There's a great quote that has stuck with me also for a long time, and I forget, I'm not sure who to attribute it to, but it's a great quote, and it says, "A goal without a plan is just a wish." Okay, a goal without a plan is just a wish. So Module 1 is so important because it's going to have you lay out your clear goals and objectives. This SMART goals is an acronym that we'll talk about. You may have heard of it, but we're going to talk about it a little bit, and we're going to build that vision statement and that foundation for you. Next, Module 2 is all about profit, right? It's identifying the right stocks, finding the best candidates, and then implementing a risk management process and technique that will grow your portfolio, like I showed earlier, tripled up over 200,000 in less than 5 years. 45% annualized rate of return. Right? I'll show you how to achieve that. Next, we'll go to the provide portion, and we'll talk about the same thing, but only this time for a dividend growth portfolio. Right? I will show you how to find the quality characteristics of a good dividend paying stock that will allow you not only a nice dividend percentage payout, but also the capital appreciation that I showed. Then finally, we go to the second part of providing, and I'm going to talk about getting paid. I saw somebody typed in real quick about selling puts. We're going to talk about selling covered calls, how the trades work, when to implement them, and correctly set up and manage. But not only covered calls, we are going to talk a little bit about selling put options as a way to generate income as well. Right? So it's a little different. While the process is a little different, actually the process is the same, finding a good quality stock. And the risk reward graph, or the risk graph, is identical to a covered call. It doesn't force you to put up as much cash. It's a great way to generate income. So we'll talk about that as well. So modules 3 and 4 are all about provide. And then finally, as I've already said, and I'll say it again, and I'll keep saying it, preserving your capital, portfolio insurance, using put options. First of all, when to be defensive, how to protect individual stocks. I showed you protecting your portfolio using the SPY, but we do it on individual stocks as well. We talk about what's called the collar trade, where you combine the covered call trade with a protective put to lower the cost of your insurance. So there's some nuances there we talk about as well. But to me, all of this is useless, right? You could do all of this on your own, whatever you choose to do, right? If you don't know how to do this, right? I guess I'm going back cop mode here, being a little more blunt and straightforward maybe than I should be. But this is useless if you don't know how to do this, in my opinion. So that's what it looks like. That's what the portfolio looks like. Very quickly, retirement portfolio transformation for the course. Okay, what comes with the course that I just showed, the 5 modules. Also, we have 5 live mastery support sessions. What we do, and I'll give the dates and times in a moment. What we do, every module that I just showed you is archived in the VectorVest University. We then have 5 live mastery sessions to review and to implement what we learned in those modules. Okay, and then finally, you're also going to be invited to our retirement coaching group, which is a separate thing. We have a membership in our retirement coaching group that meets every Tuesday at 2 p.m. and goes through all of these techniques week by week. We do trade recommendations. We talk about is it time to protect our portfolio, or are we going to do our covered call? Does the market allow for it? Where do we have to be strategically defensive? It's a great way to review your portfolios. Okay. these are the retail prices, right? It's over $4,300 is the MSRP, I guess you'd call it. But because you guys were kind enough to come today, $5.95 is the early bird special. But even better, because you're here, if you order, and John and I are going to stick around and answer questions for as long as you guys want to. If you order before we finish up today, we're going to take another $100 off that, and it's going to be just $4.95 for that entire course and all that I just showed you. You can go to www.vectorvest.com/transform. John was kind enough to just type it into the chat box, so you can actually just click on what John typed in there and it'll take you, well, I'll go ahead and click on it and show you. It will take you to this page where you can go ahead and purchase the course, and you'll see the regular price is up at $9.95. Purchase the course. Oh, by the way, if you scroll down, it'll tell you again all about the course and all of the things that are available to you. Right? I clicked purchase the course, and this is where it'll bring you. If you are already a subscriber to VectorVest, just click sign in, and it'll ask you to put in your username and password, and it'll get you signed up. If you are new to VectorVest, what I didn't mention, I'm sorry I left out, if you're in the room and you want to take advantage of the course at the $4.95 price, fill this out, and we're going to give you 60 days of VectorVest Intraday, the program, for the life of the course, so that we're all on the same page as we build and manage the portfolio. You'll use VectorVest, and then you can decide afterwards if you want to keep it. But so if you're new to VectorVest, fill out some basic information and hit submit. If you're a subscriber, go ahead and click there, and that'll get you logged in. Okay. All right. Now, as you do that, before I bring John in, John's going to come in and help me answer any and all questions that are here while you guys are still here after the course is over, right? If you show you've done the work, come to classes, watch the recordings, and you're still not satisfied, VectorVest, we will gladly give you a refund, right? They say there's no such thing as a risk-free trade, right? And that's true. Taking this course, however, is a risk-free trade, because if you don't like it, you'll get your money back. And keep in mind, you do have access to this course for 1 full year, by the way. You have access to the course for 1 full year. It's never too late. They say the best time to plant an oak tree so you can enjoy the shade is 20 years ago. Well, the next best time is today. Right? Go to vectorvest.com/transform. Click on that link that John put in. Let me ask you, or more importantly, ask yourself, how much did it cost you if you were investing in 2000, 2008, right? 2020, 2018, as I showed? How much was it costing you by not having the information to be prepared when you needed to be? Now, if that number, if it cost you more than $495, which I know it did, let's fix these things once and for all. Right? Let's make it so you never have to experience 2018, 2020, 2008 ever again. Let's make it so this year you begin to safely grow your retirement and generate that consistent income. Okay, so go to the link there. You can do that, and our friend Rob from earlier did that, and he continued to let us know that in March of 2009. Use VectorVest's unique market timing system with its fundamental and technical analysis, and he was able to recoup all of his losses during that financial crisis. Okay. He said he's been relying on VectorVest since and spends maybe 15 to 30 minutes a day using VectorVest to manage his retirement portfolio. Okay. So VectorVest.com/transform, $495 is all it's going to cost you. John has been kind enough to continue to answer all of these questions in here that have been coming in. Thank you for that, John. I'm going to invite you in, and we'll go through some of these questions and see. By the way, if you do go to the VectorVest.com/transform and you sign up, please do me a favor. Type in the chat box 2 words. Type in "I'm in," so that I can tell you what to expect, give you a shout out, and have you keep an eye out for the email that comes in with all the instructions on how to get there. And Matthew is the first one to type it in. I'm in, just purchased. Thank you, Matthew. So, Matthew, what you'll need to do, I look forward to working with you. What you're going to need to do is give it just a couple of minutes. Well, could be a little bit longer than that, but very soon, you're going to receive an email with the instructions to get to the program. Thomas says he's also in. Thank you, Thomas. And Melinda, fantastic. Again, I look forward to working with you guys. Um, Keep an eye out for the email. Check your spam folder too. Sometimes it goes there. Um, so let me show you real quick before I bring John in, just real quick, what it's going to look. Whoops, what it's going to look like when you go in. So the instructions are going to have you go once you're signed up and all. You'll go into the university.vectorvest.com. So you're in VectorVest University. This happens to be my account here. So I have all my coaching group things up here, which most likely you won't see. But what you will see, right, are the courses. Now, of course, I have access to all of the courses, so my screen's a little busier than yours will be. But if I scroll all the way down here, you'll see the Retirement Portfolio Transformation course. So you'll just click Start Course. I'm going to click Continue, and this is what the resources look like. This is what the university looks like when you have access to the course. It begins with a welcome video, kind of sets you up. Module 1 is here, the retirement. And again, I went through all the modules. I've done it differently this time. Instead of one long video, I break it down to 3. Some of them have 4 videos. They're shorter, right? Treat your retirement like a business, only 6 minutes, right? Know the 3 core strategies. Some are longer than others, but I break it down for you to make it easier to watch these videos. I talked about the mastery session. People will ask, well, what if I can't make the live session? Well, the mastery sessions are recorded and archived here. So here's the one from the last launch of this course. And as soon as we do our next live mastery, this one will be replaced with the one that we do for you guys when you join. And it's the same for each module. We have our bonus modules. Our bonus module will be trading credit spreads. And then again, you're invited to the retirement coaching group, which is a live event every Tuesday. And again, I'll bring up a calendar in a second. But if you can't make the live version, you'll be able to come and watch the recording of it. We're going to archive the newest ones for you. Okay. So that's how we do that. You also have access to all of the slides, cheat sheets, and Excel sheets, and all the things that we provide for you are all here. All right. And again, you have access. Oh, and the one thing I didn't mention, you also have access in your instructions will show you access to a dedicated email bin. So if you have questions and you can't make the live mastery session, you can just send your question in and we'll address it. Well, we'll return your email, but we'll also address it in the live session. Right? So this is what all the resources look like that you have access to for 1 full year. Okay. John, I'm going to take a sip of water and then I'm going to have you help me out here with any questions. Russell says he's in. Bob is also in. Welcome, guys. I said Melinda was in and Thomas I mentioned earlier. Thank you, guys. Again, keep an eye out for that email.
Excellent.
Hey, John.
Are you ready?
I was born ready, John.
All right. The
You're a little,
first
I don't know if it's
question,
just my volume. I don't know if I can't hear you. That might be my volume. Yeah,
is
it's
it
my
better?
volume I have on low. Go ahead. Go ahead.
Okay, so
Yeah.
the first question is about the course. Is it focused on the US markets? And by extension, is it applicable to other markets?
Yeah, I saw I briefly saw that question come through. And it's a question we get each time we do this. And the short answer is yes. The concepts are applicable to our Australia, Canada, Europe, wherever you're using VectorVest, UK. Um, the idea and the concepts and strategies are all applicable, right? The market trends, the quality of the underlying stock, the dividend portions. The only thing I comment on when I get that question is to have you guys understand that some of those other markets are not as liquid when it comes to the option portion. It can still be applied, right? But it's not. But that portion of this course is dedicated to buying puts on the SPY, but we do talk about puts on individual stocks and selling covered calls on individual stocks. So that's the only point I feel compelled to make. But otherwise, yes, the short answer is yes. It applies to all of these.
And related to that options part, what level of expertise do they need to trade options? Do they need to have baseline understanding prior to, or how does that work?
Yeah, no, I said earlier, and this I really do want to be clear on. Okay, in this retirement course, retirement portfolio transformation, we talk about two option trades that, in my opinion, in my experience, and I got getting older and I got a lot of gray hair to prove my experience. I've earned every one of my gray hairs, but it's essential that you understand these are two of the most basic option trades there are. This course will will talk about how and when to place a protect. Well, first of all, what it is, right? We'll define it and when to do it. And in the mastery session, I'll actually illustrate it live on how to do it. The covered call, like I said, is the most popular, uh, most used option income trade there is. So the short answer is no. In fact, you don't need any option background. That's what modules 4 and 5 are. They give you the foundation and show you how to apply it. It's not some theoretical thing where, hey, this is how options work. Go read 4 books and take 5 more courses. It's nothing like that. I will teach you what a put is, when to employ it, and how to manage it once you have it in place. And the same thing with a covered call. That's my
Excellent,
that's
Jim.
my emphatic answer on that.
So I was answering questions, so I don't know if you already showed the calendar for
No,
when the sessions are.
no, I didn't. Thanks. So that's the next slide here. So for those who, again, are trying to figure out the dates here. So if you sign up now, okay, you'll get access to the course this evening. Okay, once you get that email. What's today? Today is only the 11th. You'll have access to all 6 modules right away and access to them for a year. What's going to happen is the registration closes next week. So even if you don't sign up today and you change your mind, you're still going to get it for just $5.95. I believe registration closes on the 16th and $5.95 ends here on Monday at 5 p.m. Eastern Time. So what the reason I say that is because what happens next is we begin our mastery sessions. Now, this is Thanksgiving weekend. Okay, I'm not going to be here. So we're starting our mastery sessions on the 29th, and they will be every Monday at noon Eastern Time for the next 5 weeks, starting on the 29th. Again, they're all recorded and they're all archived in the university that I just showed you 2 minutes ago. The retirement coaching group that you will be invited to, your invitation will begin on November the 30th. That's 2 p.m. Eastern Time. Okay. And that you'll be invited for the same 5 weeks. If you can't make it, we record it and we archive it for you to watch later on. Now, I don't have, it looks like it's a pretty busy slide here because of the 2 months, but there is the final bonus session the following Monday, I believe is not June, January 3rd, I believe is the date, which will be the bonus session. So I don't have that on here, but just keep that in mind, right? And we'll certainly make you aware of it as the course goes through.
Excellent, Jim. What kind of time do they need to dedicate towards the content, and then after the end of the course, what kind of time would they look to spend with the material to implement?
Yeah, and like I said earlier, for those, it's not a magic pill, it's not a get rich quick scheme, and the fact is you have to put a little bit of work into it. So I'll start there. But the answer really is, first of all, you have access to it for a year. So it's not like you have to rush through this. if you go through each module, including the mastery sessions, are usually about an hour. And again, this is one of the reasons I broke down the videos for each module, is because you can now focus on specific parts of this, right? But if each module has about 45 minutes of video, and the mastery session is about an hour long. So for the first 5 weeks, you're gonna want to dedicate at least a couple of hours a week, right, for the course. But after that, it really shouldn't be more than a half hour a week, right? Listen, and there's nothing wrong with spending 4 hours if you want to. You can sit in front of it, do whatever you want. But how much do you have to spend? I don't think more than a half hour. You know, take a 5 minute look at it each day. And again, the other thing is, once we go through the modules in the course, you'll really get to see that it's, you know, while you do have to put some work and effort into it, it's really not hard to do. And once you're comfortable, you know exactly what you're looking for, and that process will become second nature to you. And so after the course is done, it really won't take you long to do what we need to do.
Excellent, Jim. It looks like Luke has decided to join us as well.
Oh, Luke, fantastic. Thanks. Welcome. Keep an eye out for the email. Appreciate you doing that. Look forward to working with you as well. Um, Again, make sure you check your
Uh,
spam folder too, just in case.
all right. I'm just looking through here to make sure we have anything, unless you can see something right off the top.
No, I'm trying to look. I see you're answering Tom's questions there. And um, is there anything I can add? Do you think, or I know they look a little more involved, but
No, we've been going back and forth
okay, yeah. See,
on.
that's what I
Yeah.
don't get the history of it. So, all right. Um,
And,
and and remember, folks, you do have the dedicated email bin. So if you take the course, and it's not limited to any. You ask any question. That's what we're here for, and we'll answer any question that you have. So if you do join the course, we'll make sure. We pride ourselves on giving our all to make sure that you have the proper experience here. So, Russell, be sure to check your spam box as well. Okay, the spam email. And John, I know John always reminds me, but I just remembered this time. So when you go into your, let me back click here a few times. So when you go into VectorVest university.vectorvest.com, right? When you go into the VectorVest University, if you're already logged into it the way I am, and if I had just signed up, there's a good chance I won't see my course down here until I log out and then sign back in. So if you have signed up and you don't see the course in the university, make sure you log out of the university and then log back in. And Russell, if you haven't seen the email yet, I would give it just a few more minutes and check your spam folder. Um, and you know what I'm going to do in case anybody has any issues? I'm going to just type in real quick the product support number for you. Right, so you can always give them a call. But Russell, don't worry. I know you were here. You will get the $4.95 price, and I will make sure you're signed up. If there are any issues this evening, I'll make sure first thing in the morning that you are in place. But you can call product support. They'll have you in as well. Somebody calling me there. Let's close that up. All right.
excellent, Jim.
Okay.
You see anything? I think
Now
we've
let's see
caught the question so
yeah.
far.
You responded to Robert there. He's good. You got all those folks. Uh, we said hi to Luke. Luke joined, right? Fantastic.
Yeah,
All
yeah.
right. Oh, great. Okay, so Luke said got the emails and see the course. Looking forward to it. Fantastic. So are we. Luke, thank you. Russ, I'm just curious. Any luck? Do you see the email yet? Again, make sure you check the spam folder.
And sometimes, depending on the email provider, they have their whatever protocols they are on when they actually update incoming email. Some of them are
Yeah,
every
yeah,
5 minutes, 10 minutes, whatever that is.
yeah, yeah.
Yeah.
Yeah, and like I said, Russell, don't worry about it. You can, like I put the number in there, jot that number down, give product support a call if you need to, um, and don't worry, we'll make sure you'll get the 495 price because we know you were here. All right. I'm going to pause for about 10 more seconds, give you guys time to type any questions, comments, concerns that you have in here before John and I wrap it up. I'll give you just another minute. We do appreciate you taking the time to be with us. And for those who are in, if you're in the room still and you're not signed in, I hope you change your mind. Like Ed did. Ed said he's in. Fantastic. Thanks, Ed. Again, as we've been saying, keep an eye out for that email. Um, Tom says, to what extent is success dependent on the calls and puts? Well, Tom, to give you a quick answer to that, I believe success is dependent more on the protective puts, right? Selling covered calls is a great way to generate income. If you choose to do it, you can have a dividend portfolio, or you can sell covered calls when you're comfortable. But I would say, uh, of the two, to be honest with you, and I've said this throughout the entire presentation today, capital preservation is first and foremost to me. So being able to protect your portfolio of the two you listed is most important to me.
Yeah, Jim, this year that has come in handy quite a bit.
Yeah, it sure has.
With
Did I have that? I wanted to add the slide today. I didn't show the one. I'll give you a quick example, and then just to give you guys a second to log in here. But Robert says he lost the page to sign up for the 495.
I got it. I
Okay,
got it.
cool. Um, I'm sorry. I thought I had the slide prepared for us here, but I don't. Um, we did one just in September. We got a confirmed up call in September, and we had put some positions in the portfolio. But shortly after, the market started to turn over. And what do I mean by that? Well, it was September, and this isn't the time, but we had gotten started to look like this. We had like two or three red lights in a row on a couple of days, even though the confirmed up call had just come in, right? I learned in my police days that I worry about everything. I'm prepared, or I try to be, and when I say I'm worried about it, it means I'm cognizant of what could happen. I kid around with my kids and my wife. I tell them, when they yell, I said, listen, I have the burden of knowledge, right? I know what can go wrong, right? We always called the burden of knowledge, right? I know what could go wrong. So anyway, that's kind of a joke. So I went out and I bought some protective puts. Now this again was back on September 9th. I bought two SPY at the money contracts. I paid $7 and change for them, right? And less than 2 weeks later, I sold them for an average price of 16 and a quarter. So I made $1,700 in about 2 weeks as an insurance policy when the market was going down, right? The market turned over. I didn't sell any of my stocks. I didn't have to, right? Our investment plans do include stop criteria and risk management techniques, right? But because I had the protective puts in place, I mitigated the drawdown, right? I was talking about earlier. This is a drawdown, right? Whatever portfolio you're in, right? If I could mitigate that, I don't have to wait 2 months, 6 months, 2 years, whatever it might be, right? This one happened to be a very quick one, right? I mitigate the losses. The insurance policy offsets the damage to my asset. And that's a real life one we did. I did another one at about $1,400 in a different account. So that's my answer, Tom. It's essential to build and manage your own portfolio to know how to protect it.
Looks like John over there is also in since you
Great.
started talking.
Yeah, great, John. In Newfoundland. Fantastic.
Yes.
Nice. Well, welcome, John. And is it John or William? I'm in John from Newfoundland. Maybe it's just on a different thing. Anyway, welcome. Keep an eye out for the email. If you have issues, use that number I put in the chat box. And thanks for taking the time to sign up. We look forward to it.
I'm second guessing myself now. I read it as his name is John, even though the typed name
Yeah,
is different.
I don't
So
know if he's
I'm
addressing
wondering if
you.
he was telling me,
Yeah,
right?
yeah. That's kind of where I got lost. I'm holding on for another minute because I'm curious to make sure Robert finds the page. I know you put the link back in for him. I want to make sure Robert finds the page and gets in there before we.
Head on.
It's okay. It's William, but he does go by John.
Okay.
Yeah, okay. We were right and wrong at the same time. Um, John, I'm gonna give him 30 more seconds, 20 more seconds. He can't find it. Thanks, Mike. You have a great night as well. Robert, if you click on the link that's in the chat box, you're saying it's not bringing you to this page where it says purchase course now. www.vectorvest.com/transform. Great. Ed said the main reason he's joining the class is to learn about the protective puts. And yeah, we're going to talk a lot about them. It's not till module 5, but Ed, you'll also be invited to the coaching group. So well before that module comes, if it's time, I go through, I illustrate how to set them up and actually place them. We have actual live accounts, real money, real VectorVest money that we use it for. So, you may see them in action before the Module 5 comes, although you have access to Module 5 anytime you want, but uh, we'll actually do them live too in the coaching group.
You want to walk him through just placing the order when you click the link?
Yeah, so when you click the link, it brings you here, but Robert's saying that he doesn't see this purchase
He
course now.
he clicked on it, but he can't place the order. Let's make sure he can at least see what you're seeing.
Okay. So Robert, uh, when you click purchase course now, are you saying this doesn't come up? John, maybe it's better if he just calls in.
Yeah. I'm thinking at that point he should just go ahead and call in,
All right, I'm going to do this.
and they can order it for him.
Yeah, they'll take care of you. It'll take them 2 minutes. Well, maybe 5 minutes, but they'll get you ready to go. I'm just going to type it in directly to you, but it's also in the chat box there. And
Yeah.
I'll go out and quickly let them know, to make sure you get the 495. But Robert, that might be the easiest way at this point. Russell says he's Russell. So you're not in as well. You're getting an error message when trying to sign in. All right,
So same thing here. They can just enter it from the system over here instead of the
yeah.
um
Russell, I typed it in directly to you as well, the product support number, although I did put it in the chat box as well. Um, I'm just going to try something real quick. So if
it
I'm,
will for you it will error out because it's linked to your employee account.
right, but I'm still able to get to the link. I can come here.
Yeah,
Right. So
I tried it as well.
I see what you're saying.
Yeah.
Yeah. So if I actually, I know what you're saying. So if I actually click
It will
sign
get
in,
here, then it will give, yeah, if you sign in and you go through, it will give you this weird error message.
yeah. So I click sign in to VectorVest. I'll just bring them as far as I can, I guess.
Yeah.
So
So it gives that,
yeah, so because it knows I'm an employee,
yeah.
it charges me double. I got to actually pay $9.95 for this course. God.
Yeah, so
All
if
right,
it gets here, then they should be able to order it.
right.
but it may be easy to just call in.
Okay, yeah, Russell says he'll give a call. Yeah, for whatever reason, there's no. Don't get frustrated over it, right? Don't get frustrated. What did our old colleague is since retired Dennis used to say? Don't arm wrestle with the software. Just give a call and they'll take them 5 minutes and they'll get you signed up.
Oh, Adam just sent me a chat message.
Hmm.
If you go to the website, vectorvest.com, in the chat, Adam can do that as well through the chat. You know how it says talk to us?
Oh, okay.
Adam is on the chat and he can also process the order.
That's if you just go into university.vectorvest.com.
No, just vectorvest.com, period. You can show them where that is.
Oh, so okay. So if I just go to, let me get a different screen. So if I just go to vectorvest.com,
.com. Yep.
it brings me just to our basic website,
You see at the bottom it says live chat.
live chat.
Click live chat. And you'll enter your info. Adam is waiting. So they have options. So they don't have to feel like they have to call. They can
Okay,
also use the chat.
cool.
So Adam just said he's waiting for anybody to do that with as
Good deal.
well.
So again, vectorvest.com, www.vectorvest.com. Click the live chat button, and our colleague Adam will be there, or call. So either way, but
Yeah.
that's good to know that we can do it that way as well. All right. Okay. There's still a few people left in the room. If anybody's in the room still pondering, as long as you guys are in the room, I'll answer. It's 6:11 Eastern time, 18:11 hours. Give it another minute. All right. Oh, there's a game tonight too. I got to get home in time for the game. I got to do my DraftKings lineup, so I forget who's playing. Oh, Ravens and Dolphins. That's it.
Yeah.
Because not only do I trade stocks, but I play DraftKings too. Gosh. All right, folks. I'm going to go ahead and wrap it up there. On behalf of John and myself and VectorVest, thank you. It's midnight in Belgium, Luke said. Luke, get some sleep. We'll look forward to seeing you. Take care. We'd like to thank you all for taking the time. For those who are left here, please stay safe, stay healthy. Remember, if you change your mind, you can still sign up for the course. You got till Tuesday, technically Monday at 5. The 5.95 price goes away. But if you change your mind, please sign up. We look forward to having you. If not, stay safe, stay healthy, and we'll see you guys next time. Bye for now.